Hey everyone, welcome to today's video on fees. Now you're probably thinking to yourself, another video on fees? Because you're probably being bombarded or you've seen a lot of commercials on social media and on TV about fees. You're paying too many fees. Fees are too high. You're not going to be able to retire because of your fees. Fees, fees, fees. Don't we just love hearing that word? But there is one difference between understanding what fees are and how they work and being bombarded or being told about fees. And that is why in this video, we're going to look at some of the common fees that most investors will pay, those being the management expense ratio, the MER, and the other would be the advisory fee. Now, these typically charged through an advisor or a financial planner if you're working with one. Let's jump right into things, starting off with the management expense ratio or MER. Now, the MER itself represents the annual fees that you, the investor, are going to pay for the costs associated with managing and operating an investment fund. Now, that could be a mutual fund or an ETF. And these fees themselves are going to be expressed as a percentage of the fund's average net assets. Now, how do they work? Well, the MERs actually cover a bunch of expenses, including management fees, administrative fees, and other costs, which we'll go into detail here shortly. And then these fees themselves are going to be automatically deducted from the fund's returns, which mean that you don't actually get billed directly for these MERs. Okay, so talking about the expenses that the MERs covers, let's look at the management fees. Now, these management fees are used to compensate the fund managers because they're the experts and they're giving their effort in selecting and managing the fund's investments. Part of that also goes into the portfolio manager and their team because these individuals are educated and very specialized and are there to manage the fund for you. And those fund managers and teams need access to reports, research reports, company executives, market data, and other analysis tools to help them manage that fund. And finally, this is their full-time job. So just like we have a job, these fund managers are paid to dedicate their time to managing this portfolio for you. So part of the management fee goes towards that. Then we have administrative fees. These will cover the costs such as running the fund, record keeping, legal, and accounting services. Then we have some of the other expenses that the MER will charge. Those include the marketing, the distribution, performance-related fees, and sometimes will also include taxes on the portfolio management and administrative fees. So as mentioned previously, you're not going to be billed directly for these MERs. However, you still have to pay them. So how does that work? What happens with an MER is that instead of actually being billed directly for these, the fund's net asset value, the NAV, is going to reflect these deductions. So what you see on your statement is actually a slightly lower return. Now, to look at this in an example, let's say I have purchased a mutual fund that has a 1% MER. Now, when I look at my annual statement, I will see, okay, my mutual fund returned me 9%, which is pretty good. But ultimately, what happened here is the fund itself actually generated a 10% return, but the 1% that I'm paying for the MER has been taken off that 10%, leaving the investor like us with the 9% net rate of return after. And that's how the MERs are paid. And as the investor, that's what you'll see. Typically, the net return after the MER has been taken off. Then we have the advisory fees. Now, with the advisory fees, these are paid to a financial advisor or investment advisor for the services that they provide to you to build your investment portfolio and to also provide full financial planning. So unlike MERs, the advisory fees are going to be charged directly to you, and they're based on a percentage of the assets under management. And I'll give you an example here shortly. And here's a very important tip though. If you have a non-registered account, these advisory fees are actually tax deductible. And if you're unsure what a non-registered account is, you can watch my previous video that talks about these accounts in more detail. Now that's just kind of to summarize what an advisory fee is. Very simple. But let's look at the differences between the MER and the advisory fee, starting with the source of payments. As mentioned, MERs are deducted from the fund's assets, where the advisory fees are going to be billed directly to you, the investor. Now, in terms of the type of service, MERs are there to cover the cost of managing and operating the fund itself, whereas the advisory fee is actually going towards compensating the advisor to provide full personalized investment advice and in some cases, full financial planning, which goes into a lot more detail than just investments themselves. And then we have transparency. Advisory fees, you'll notice, are a lot more transparent because they're charged separately than the MER and they're disclosed on your statements. Whereas MERs, because they're embedded within the fund's returns, not all MERs are fully disclosed. And the best way to look at this is through an example. So let's look at an advisory first. Now, when it comes to working with an advisor, there's a lot of different institutions, banks, private firms, investment firms, and you'll notice that each firm has their own fee structure. But to give you an example, typically what you'll see is if you have, let's say, under $250,000 of investable assets, the fee will be a little bit higher. And then if you move up from 250 to 500,000, the fees will slowly start to reduce, and then 500 to a million and onwards. And what happens is these fees are tiered, which means the more money you have, the lower fees you'll pay. And again, because this is all based on the assets under administration and the investable assets that you, the investor, have. And based on that, the advisory fee will be adjusted and charged and billed directly to you. Now, for the MER, on the other hand, if let's say you're doing things yourself or you want to get started and you're looking to see where can I find this information, well, it's actually quite simple. So what you can do is if you're looking for a specific ETF or mutual fund, you can actually go directly to that fund company's website. So let's look at the Vanguard S&P 500 ETF. Now, what you'll see here is a lot of information about the ETF itself, the index, the rates of return, the market cap, and you'll also see the net asset value, the NAV, for the ETF itself. But as you scroll down, you'll see here it says the expense ratio. Now, this is where we want to look, because here it says 0.03% as the expense ratio, and you can see here what exactly you're being charged for. So if you click on the blue link above the expense ratio, it'll tell you exactly what it is. It says expressed as a percentage, the expense ratios are fees charged to you, the investor, to cover a fund or ETF's operating costs. They're deducted from dividends and capital gains distributions, not the principal. So what that basically means is you, the investor, are going to pay a fee on this ETF of 0.03%. Now, when you look at your annual statement, what this means is if you saw a 9.97% rate of return, for example, the ETF itself actually generated a 10% rate of return, but they're taking that expense ratio of 0.03% off and leaving the investor with the net amount of that 9.97%. And if you're working with an advisor, you can also ask them to give you and provide you with that information as well. Now that brings us to the end of this video. And there's a few things I wanted to mention before we wrap things up here. There's some other fees that will be incorporated sometimes into account management, such as administrative fees, account fees, and often trading fees. Now, it's very important, again, if you're doing things yourself, that you assess and gauge exactly what you're paying on the account level and also on the investment side as well. Because if you do actively trade, there might be fees associated with that. And those fees, again, vary depending on where you're at, which brokerage firm you're dealing with, and how often you're trading and your account value. So again, always do your research and do a little bit of digging to see exactly what you're paying. It's always important to understand what fees are, especially in today's day and age where we're giving so much information about investments. Understanding what we're paying is very important. So as always, if you stuck around to the end, I do appreciate you as always. Thank you so much. It does mean a lot to me. And I hope that you found this video informative. And if you did, I do kindly ask to hit the like, subscribe button down below. And I hope to make more of these videos for you in the future. Thanks again, and I hope to see you in the next one. Take care.